You have a new short position in Manulife Financial. Is that correct?
That's correct, Eric.
So this is a big company. Let's just be clear what we're talking about. This is a well-capitalized insurer with a $35 billion market cap. That's in U.S. dollars, $43 billion in revenue, $3.5 billion in annual profit. Why are you short?
Well, Manulife just concluded a trial, and we expect a verdict by the end of this year that could have significant negative impact on its insurance subsidiary. So what's at issue here is that Manulife's insurance subsidiary might be forced to allow potentially billions of dollars of money to flow in on 30-day money, so very short-term money, and it might have to pay a 4% or even higher annual yield on that. And this would cause significant losses to the insurance subsidiary, and could create real problems for its capital. So this is a binary outcome. If Manulife prevails at trial, nothing changes. If Manulife loses and the plaintiff wins, then it could be a very serious problem for Manulife. So that's why we're short.
I want to clear a couple of things up for everybody, Carson. First of all, your audience knows, by virtue of experience, that most of your shorts are based on a forensic thesis, right? That the company in question misstated its financials, hid damaging information, or perhaps even cooked its books. You're not saying that. This is effectively an event-driven trade, correct?
Correct. There's no element of wrongdoing here. The one thing question...
I'm sorry, I'm glad you mentioned that, because that's really important to emphasize, that you're not saying, unlike past positions, that Manulife did anything wrong.
That's correct. Now, there is a question whether Manulife should have disclosed this litigation, because in the litigation itself, its own expert submitted a sworn affidavit laying out how this could really become a parade of horribles for the company, and it really could have material impact. But, this really looks to be more an issue of incompetence from the 1990s, some policies that were underwritten back then that nobody realized had this, potentially had this major error in them, and they were also underwritten at a time when, 4% guaranteed rate wasn't that attractive.
I want to walk through the mechanics of the situation again. It's important that people understand how it all works, Carson. An investor, as I understand it, acquired an old Manulife insurance policy that paid a this is what you're describing, paid a guaranteed return well above current market rates, interest rates. And this contract, in theory, allows the investor to put unlimited funds into the policy, meaning that Manulife could be on the hook. Sky's the limit, so to speak, and that Manulife has refused to honor the policy, and the investor has sued the company to force it to make good on the contract. Is that correct?
That's correct. And again, we expect a decision by the end of the year. So basically, the investor is a limited partnership. It is set up as a hedge fund. If it wins, it's going to seek to raise significant money. And this could effectively make this hedge fund, if it wins, the highest yielding money market type product in the developed world. So what they would do is they would raise money, and they would stick it into this guaranteed interest rate account that is supposed to pay 4%. Now, when you look at the plain text of the insurance contract, they appear to be allowed to do this. There's no limitation on the amount of money they could put in. And there's actually express language that says, we will always honor this guaranteed rate. It's just nobody thought, hey, maybe somebody would try to stick billions of dollars in there in an environment in which interest rates are really low. But it actually gets worse for Manulife. There's a second argument that the plaintiffs are making, that they're entitled to an annual 85 basis point or 0.85 bonus on the policy anniversary date. And that appears to be, look, it's not an outlandish claim based on our reading of the contract. And so the plaintiff's view is that they could put the money in, they could put a huge amount of money in the day before the policy anniversary date, collect that 85 basis point bonus, and then redeem it 30 days later. And if they were to acquire multiple contracts, they could get that 85 basis point bonus multiple times per year if they can acquire the same type of contract, which we understand is feasible. So these are two separate arguments here, that they're entitled to get 4% guaranteed rate on unlimited money, and that they can clip an additional 85 basis points potentially multiple times per year.
You describe in your report, Carson, which I've had a chance to read, that the worst case scenario is a death spiral. You use that word, death spiral, that term for Manulife. What do you mean by death spiral?
Sure, and to be clear, that's derived from their own expert sworn affidavit. So what could happen is that because when they would put, if the plaintiff is able to put this money in, Manulife, because it's an insurance company, it's highly regulated and it's very limited in what it's able to invest in. So there would be a negative carry there of some sort. And so that would immediately hit earnings. So Manulife would have to say, okay, the net present value of this negative carry, we estimate is X, hit earnings, that reduces capital. And so they would have to then raise capital. And as the company, so that would, of course, potentially dilute MFC shareholders. But the other thing is, as the credit rating gets pushed lower, then potential policyholders would say, well, you know what? I'm going to go somewhere else for my life insurance. And to be clear, there are two other life insurance companies that could be implicated by the same set of issues: Industrial Alliance and Bank of Montreal's insurance subsidiary.
Carson.
They're all part of the same trial. But other life insurers, to our knowledge, don't have that issue. So when you're trying to figure out where am I going to feel safest locking my money up for 30 years potentially, you would go with a higher rated firm.
Carson, again, given that this is not based on forensic work that you've done, how confident can you be about a court case and an outcome that has yet to be rendered by a judge?
So if this were in the U.S., we'd feel very good about the plaintiff's chances because, so let me just state, we are not Canadian attorneys. We have consulted Canadian counsel. But to our mind, the plain text of the contract allows the hedge fund to do this and to get the 85 basis point bonus. Now, Canada, you guys do things a little bit differently there. It's not always up to the plain text of the contract. There was a fairly recent Supreme Court decision called Schatzker that might be applicable here. So we have a lower degree of confidence that the plaintiffs will prevail under Canadian law than we would under U.S. law. So, look, we don't know, but the bottom line is it's pretty binary. If they prevail, this is going to be material for MFC, and this risk is not priced in to our view because we don't think investors know about this litigation.
Carson, while I have you here, I want to quickly run through a couple of other topics. As you've probably seen, because you engaged with your audience on Twitter before coming on Bloomberg Television, they thought you were going to be shorting one of the Canadian pot stocks. Maybe Aurora, maybe Tilray, maybe Canopy, maybe Kronos. Have you looked at those stocks and do you have a view?
I don't have a view. We've looked at some of those stocks in the past. We've never seen, the companies we've looked at, we've never come away saying, oh, that seems like a great company. There were always issues. But those issues, in our view, didn't rise to the level that we had a viable short thesis, based on anything other than valuation.
And the second thing I want to ask you about is China. You and I have talked at length about what you believe has been and continues to be Chinese manipulation of the U.S. capital market. As you may be aware, we published a story in Business Week today that has nothing to do with alleged Chinese manipulation of the capital market, but it does have to do with Chinese theft of intellectual property. A hack that the Chinese government, we've reported extensively, was able to introduce into a piece of computer hardware that victimized Apple, Amazon, a major bank, and a number of other companies. Carson, based on your experience, what do you think of that reporting?
Okay, so, well, first of all, congratulations to Bloomberg on fantastic reporting there. Second of all, look, I think many others have long suspected something like this was possible, was likely. Now, when you and I spoke in June, I think I made the point that at the end of the day in China, there's no such thing as a purely private company. That if the government comes and says, do X, Y, Z, the company does that. And so what you guys reported is that subcontractors to Supermicro, and just to be clear, we've had a small short position in Supermicro for a while, unrelated to this, that subcontractors were basically told by the People's Liberation Army, put these chips on these boards or else. And so they did it. And it's a really interesting juxtaposition versus what was going on in the U.S. So supposedly in the U.S. in 2014, the Obama administration became aware of this problem with the Supermicro servers. And they didn't know what to do because they said, gee, it's a private company. We can't go public with this and destroy a private company. So this is the fundamental problem here, this mismatch of systems. The Chinese can exploit their businesses for their geopolitical gain, whereas, in the U.S., a free market, we cannot. And we have to figure out how to solve this.
Carson, one other question. You've gone up against many large companies that have challenged your assertions and your forensic work. Apple, Amazon, Supermicro, the Chinese government all full-throatedly denies our reporting. Based on your experience, what would you say to that?
Oh, welcome to my world. Look, I'm sure you guys have seen that. I think Bloomberg wrote that there were 17 sources, so none of them were named. So I'm going to assume you guys did your reporting well, and assuming you did, look, that's pretty significant. And obviously, Supermicro, the reason we've been short has been the accounting story, but there's been a real problem with its business. With revenue, they announced they lost 2 major customers. That appears to line up with the Bloomberg reporting on this topic.